Hi and welcome back to the channel. Now before I get into this week's review, please pause the video, make sure you're comfortable with that very important disclaimer before watching any further. Just basically says that there's not any investment advice. Please do all your own due diligence and don't be silly. But thanks as always for many of the kind messages and emails after last week's detailed monthly analysis, which included a lot of economic data. Now, I will not go over that same data again, but if you missed that, I will link it at the end of today's video. But let's just start off with the S&P 500. Now, I am using the ETF SPY here. Now, what you may notice with the S&P 500, and this is something that you will see across social media, especially on Twitter, is the S&P 500 is moving higher on declining breadth. Now, the breadth data that I am using here is a technical tool that just tells me the percentage of stocks that are trading above their 200-day simple moving average. Now, as we can see, there is a divergence between this breadth and price. Now, I'm not overly concerned by this. The bulk of my work is, of course, long and short. I'm open to all outcomes. I fully understand the economic turmoil that we have out there, but my job is to focus on what the stock market is doing and not necessarily what the economy is doing, because they are two completely separate things. And for me, what I'm looking for here is the S&P 500 to potentially break out above a confluence of important technical levels. Now, the reason that the breadth isn't such an important thing for me is I like to do the hard yards and go through all of the individual stocks on a stock by stock, sector by sector basis. And my job is really just to focus on the stocks that are above their 200-day simple moving average, because what will inevitably happen is we will likely get a breakout in the S&P 500, and then we'll get the expansion of breadth. Stocks have been going up over the course of the last 6 months. Technology is breaking out on both an absolute and a relative basis. This is not bearish for the stock market. I'm sure it's not escaped everybody's attention that the mega cap tech names just keep chugging along, the Nvidias, the Metas, etc. It does feel like it's a tech market at the moment, and I'm okay with that because, like I said, my job is to focus on the areas of the market that are going up, but also be aware of the areas to stay away from, and also recommend to our clients areas that might be potentially setting up to the downside. But downside is not in tech at the moment. Seasonality is going to plan, although we are, of course, massively outperforming seasonality. The month of May, we are currently up nearly 4.5% in the triple Qs, and we've only just got the triple Qs potentially just starting to break out as well. Big component, lots of big heavy hitters within the XLC communication services sector. We've got the likes of Google in there, we've got Netflix breaking out this week to new 11-month highs. This again is not a bearish development for the market. Now, if you have followed my work this year, you will already know that the US dollar index has been a massive driving factor for many of the investment theses that I've had. Now, what we've been dealing with over the course of the last week is, or the last few weeks, is a rebound from logical support levels in the US dollar index. Now, the US dollar has been a wrecking ball for stocks over the last couple of years. As the US dollar was rising, of course, this was coincided with the most recent crash. And then what happened is in October, the US dollar peaked the dollar went down and stocks have been going up ever since. So I've been watching this chart with a lot of interest because I've always had concerns that if the US dollar does rise here, what the implications could be for stocks. Because the correlation is very, very clear over the last couple of years, is that like I said, if the dollar is going up, then it's reasonable to assume that stocks will go down and vice versa. But what I did this week, and some of you will have picked this chart up that I posted to Twitter, is I like to dig into the data and not just react to what I think is happening, but what is actually happening. And since the US dollar hit its low on the 14th of April, we can see that this has not been bearish for technology names. We can see that the small caps are down, gold is down, bonds are down, commodities are certainly down. So the rising dollar is a problem for some areas of the market, but for whatever reason, it's not a bearish development for tech. So tech has been the focus of my work for the last couple of weeks. I do have around 15 individual stocks and ETFs that I will be walking through in just a couple of moments. But I think it's quite important just to walk through a high-level broader market analysis, because we are still in a bullish regime. The S&P500 is still trading above its 10-month rising moving average. We can see that this is a good risk-on, risk-off indicator. If you had got out below the dot-com bubble, you were saved. If you got out below the financial crisis, you were saved. And again, the 2018 correction, the COVID crash, and of course the most recent crash as well. We are now above the 10-month moving average. For me, it's still a risk-on environment. I am still looking for stocks to buy, recommending to our clients and members, etc. Just to be very, very clear on that. And we're seeing an expansion across the world. We're seeing the all-country world index potentially setting up to break out. Now, one of the reasons that's important is there's a very strong and clear correlation with the S&P 500, which I have overlaid to this chart. So if the all-country world index breaks out and gets above the $94 level, again, I think that's a further bullish catalyst for stocks. We've already seen that with XLF, the financials are still holding up, despite all the negativity with all of the small regional banks that seem to be disappearing. For whatever reason, XLF continues to hold up. There are a lot of individual names within XLF that are looking very, very interesting to me at the moment. And of course, we've got the regional bank. Again, some of you will have picked up a tweet that I sent out a couple of weeks ago. Just for, again, disclosure, any charts that have been recommended to our clients and members over the last couple of weeks, I have highlighted them on the chart. This is one of those disclosures highlighting potential capitulation and a reversal. The regional banks are up 15.5%. Since then, it's been working really, really well. But I am very mindful that it could also be a falling knife. So I am mindful of things like declining 50-day simple moving averages, etc. But ultimately, if it is capitulation, then what will happen is once we start to test these levels, it will just break through the levels. And again, that will offer opportunity to potentially add to winning positions. And we've got the micro caps continuing to hold up as well. So when we look at the broader market and look at it all as in context, for me, it's a lot easier to find stocks to buy. But again, there are plenty of stocks out there if you want to short. It's one of those environments that everybody can do well from, which I absolutely love. But I am about to walk through around 15 individual stocks, but if you are still here, it tells me that you're getting a lot of value from my work. So please, please, please hit the like button, subscribe. There will be a little button in the bottom right hand corner of your screen where you can subscribe, and let me know in the comments what you think is going to happen next. But also, if you require technical analysis software, we have just recently partnered with TradingView. They are perfect, incredibly cost effective. There's a link in the description for a free 30-day trial as well. But let's start off with a couple of areas of the market that I find really interesting, both from to the short side and to the long side. If you are looking at Asia at the moment, it's very, very clear. I think for me, the Chinese names are now starting to show a lot of weakness. So if Hong Kong and China break below these key levels, again, we've had Alibaba earnings this week, which the market didn't receive too well. A lot of the Chinese internet names have taken a fall off a cliff this week. These are the reasons why the charts are setting up, I think, to the downside. But to the other side, we have Japan breaking out, the Tokyo topics breaking out to new highs. We've got the ETF, if you want to express a bullish thesis, potentially looking to break out above $61 as well. But for many of you, you will already be looking at stocks. Now, like I said before, some of these names I will be walking through, we've already been covering them for a few weeks for our clients and members, but some of them are already potentially setting up again. Amazon is one of those. We've been long since $100, and it looks like it is trying to break out today. As I record this a couple of hours before the market closed, that the market is giving back a little bit at the moment after the week that it's had. We are going to have to navigate the debt ceiling nonsense that the media are running with at the moment. So I expect some movement over the weekend on that. So we'll see how the market opens on Monday, but it's probably 50-50 whether it's up or down significantly. I don't expect a flat open on Monday, let's put it that way. Now, Google, of course, is a chart that I've been covering on my YouTube channel for a month now. It's broken out as expected. It has already hit our first upside objectives, but I think if it can break out again above this 124 level, I think you're then bringing in the longer term target around 150. We've got Costco, which I think is close to setting up for an explosive move in either direction. This is a 9-month consolidation pattern. I think if there's a move above that 510 level, then I think Costco will be appealing to many. To the other side, I said that there's not any shortage of stocks that you might wish to short. 2 weeks ago, I covered this chart for PayPal on YouTube, and of course what's happened is it's done exactly as expected. It's broken down, showing a lot of weakness. We've got Nvidia, just incredible. This has been just one of the best trades ever. But we are working still with upside objectives there around 350. If it keeps on its current path, then I expect that to probably be hit in the next couple of weeks, provided of course the market doesn't fall off a cliff. I'm not making any massive broader market calls 6, 9, 12, 24 months before they start to play out, like a lot of the clown shows on mainstream media, etc. For me, it's really just looking at the charts on an individual basis. We've got Berkshire Hathaway. Again, I think this is a healthy sideways consolidation, hopefully stair-stepping. I like it again if it can get above that 333, 334 level. But again, we still remain bullish on Berkshire Hathaway. Palantir has been an absolute juggernaut this week. We covered this one for our clients last week on the strength of this breakout, and it's just had an absolutely ridiculous week. It's reclaimed its IPO levels there at $9, which is why it came onto the radar, and ultimately the momentum move, as expected, has taken place this week. So we'll see how far Palantir ultimately wants to go. Boston Scientific, again, going out, it looks like at new all-time weekly highs. It is outperforming the S&P500. Lam Research, again, another big one this week. What I would say with this is the RSI levels are a little bit overbought at the moment. So I would expect some kind of pullback, but if you understand trend following processes, pullbacks and uptrends oftentimes offer opportunity as long as you can define the risk. So I think with the pullback, I think any pullback or any weakness here in Lam Research can ultimately be bought. But again, I don't second guess these things. I have systematic processes in place, things like trailing stop losses, which are set to very specific parameters that have been fully tested. So yeah, I think weakness in Lam Research might appeal there. Monster, again, it has been a massive winner. We are still working with upside objectives here around $71. Apple, very, very close to hitting our upside objectives here around 180 to 182. We've got Meta, again, it just seems like this thing just won't stop. We are still working with upside objectives here around $270. If you just let me add, just to show you that this is what systematic process does. It just keeps you in a position for as long as the trend is going. This has obviously been one of our plays since the start of the year, and we're working with targets here around 270 now. Spotify, I did cover this one last week. I had a few messages on it. Again, pullbacks and uptrends offer opportunity. It's up 20% from its original breakout. Systematic process will keep you in a position and stop you second guessing all the mainstream media clown shows. We've got MDB. Again, we've been bullish above 250 on this. It's broken out. It's doing well. Systematic process now has this. As long as we're above 260, we still like MDB. Now, a few ETFs that I get asked about. Gold is still range bound at the moment, so that's the first thing to say. The gold space for me is not interesting in any way, shape or form at the moment. A few weeks ago, I was looking at gold miners. Ultimately, the gold miners failed to kick on. Many of them failed to break out. But we've got metals and mining now starting to show some weakness. Again, this is from our ETF chart book, and we're not bullish on metals and mining ETF at the moment. We've also got the Turkey. Some of you will have seen that I posted this one to Twitter this week, holding on to key levels dating back to 2019. I think if Turkey falls away here, then that's a big problem there. We've got the AI ETF, BOTZ, bots, let's just call it bots, has broken out. We are working with upsides there around 2860. And we've got semiconductors. Now, the question that I would pose here is if the semiconductor ETF is going to move here and get above key levels, and what would this mean for the likes of Nvidia, etc., which have already moved significantly. So I am still working with around 17% upside left in SMH, but again, we'll see how things play out there. And I have already covered that chart for the All Country World Index. So I do hope that you have had some value from this analysis. If you like the analysis and would like to have access to all of our best charts and all of our best work every weekend, please do go and check out our website at honeystocks.com. We provide our premium weekend analysis, like I said, all of our best charts, all of our best setups, every single weekend to our clients and members. We provide high conviction investment ideas. I have shown you what a few of those look like. I also provide access to our midweek halftime, which is a midweek 5-minute video analysis which is sent out every Wednesday. We also provide access to a wonderful community on my platform. Provide access to all of our chart books which cover stocks, sectors, commodities. And if you are somebody that would like to learn a bit more about technical analysis, build a systematic process, etc., that suits your own profile, I'm told I've built one of the best technical analysis programs out there. So feel free to go and check that out. We also publish all of our high conviction investment ideas. We timestamp all of our work. It's all logged on our website, all of our big market calls. And of course, we also log all of our high conviction investment ideas. And you can go back over the course of the last 5 years and check to see if the types of stocks that we like to recommend are the types of stocks that you like to typically buy as well. So if you are still here, thank you very much for watching, and I hope to welcome you soon. Thanks.